Good morning, everybody. Mike Vaki, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, so daily chart of the ES, and last couple days we talked about how tight the Bollinger Bands were. Okay, and after Thursday, going into Friday, we said one of two things: either this is going to be the head fake of all time, or more simply, it was going to be a lower Bollinger Band ride. It was the latter. We are in the middle of a lower Bollinger Band ride. We had a 48 handle range on Friday, a good old-fashioned down 2% day. Haven't seen one of those in some time. And we closed dead, pretty much dead on the lows, within a tick of the lows down at 1780. We opened up lower last night, came down to test this yellow line. That's the 23% retracement, 23.6% to be exact, of the what I call the whole move. The whole move is 1340 quarter to 1846 half. Okay, that's from back with the debt ceiling and the sequester and when the congressional leaders got out on the White House lawn. That was 1340 quarter, and we haven't really looked back since. So what am I looking at now? Well, I told my subscribers last night that we need to look for. The bears have followed every step they needed to follow with respect to a lower Bollinger Band ride. Okay, took out the lows, the middle band here, the green line has been confirmed as resistance. Now I would expect us to trade in what I call the channel. The channel is the gap between the third standard deviation band here, this is the gray line, okay, which we tested Sunday night and got back inside. We're inside the channel now. What tends to happen on true lower band rides, when they are particularly painful to those that are long, you will have the lower band become channel resistance. So that's what I'm looking for this morning. We bought some into the close. I think I even put that out on Twitter. I'm out of that now, probably too early, but I'm looking for a move up to 95, 96 to test this lower band. The 1821 short I told you guys about on Friday morning. We covered the final piece of that down at 1781 for 40 handles. So it was a very nice day for the room, and it was nice to see the Bollinger Band ride play out, because we had it pegged from Wednesday, Thursday, Friday. From the Wednesday night subscriber webcast into Thursday, and it was good to see it expand and play out. And I hope if you followed the recommendations and you followed what we were saying about band expansion, that you had a very good day on Friday. So what happens up here at 95, 96? You could do a little bit of an overshoot. You got a little double fib area here, 1797, 77 to 1800. The bulls, especially the ones that are in a lot of pain, are going to be expecting some kind of a V bottom down here. That's very unusual. It typically does not play out like that. If you go back to the last time this happened, which was the congestion here and the spill out here, that lasted 2, 3, 4, 5, basically 6 days, where we spent at least part of the day below the lower band before we reversed and truly reversed here on the 22nd and started to head higher. And you see here we had a big down day, channel day, channel day. So I'm really expecting 2 channel days, and I think we may just be beginning to have the first channel day. So I am in sell rallies mode. I am waiting for the failure up at 95, 96, or maybe a little bit of an overshoot to get short to ride that back down, because at that point we will have done 20 handles off the lows. So the argument that we're going straight down, that goes right out the window. We're no longer going straight down. We've bounced from 1776 quarter to 1792. If it died right now, that argument's out the window. Okay? So you have to take each trade as it comes. The big dump out trade, the big short, the easy money short trade, that's over. That was this. Okay? Now you have to start looking. If you're in the bounce, you ride the bounce, okay? Some will ride it longer than others. But that bounce is a rally that should be sold, okay? So don't be marrying these long positions. If you got in down in the 70s, and you feel like the uptrend is good, I would absolutely keep some on, okay? But if you're a shorter term trader, then you look for where the bounce exhausts and you look to sell that bounce back down into the channel. But I would expect it to trade between the second and third standard deviation bands today. Okay, have a great day. Follow me on Twitter. Check out the website. Come check out the chat room. That's all I'm going to say. Come check out the chat room. There's some very, very exciting things going on in there. I will catch everybody tomorrow morning with another webcast. Trade them well, everybody.